Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm going to compare a couple of similar companies, Domino's and Chipotle. We'll take a look at their stocks and try to identify which one is the best value, which one should you invest in over the next 3 years or so. It's amazing how comparable these companies really are, so I'm excited to dig into it. Just a reminder that my stock picks and projections are just my opinion only. Please talk to a financial professional before investing in the stock market. However, if you do enjoy stock market analysis, comparing stocks, personal finance tips, then please be sure to subscribe to the 40 Finance channel. Thank you to everybody who has subscribed so far. Alright, so while Domino's and Chipotle serve different foods, they're also in that same kind of category, that sort of fast food, quick service type category, obviously on different ends of the scale between pizza and burritos. But when you look at the two from the eyes of a restaurant market lens, then you can see just how close they are together. This graph here is the 2019 Quick Service Restaurants Top 50, and this is a widely regarded rankings that a lot of analysts look at. And you see that Domino's falls in line at number 9, and Chipotle comes in at 12. And it's really interesting to look at their different metrics that are shared here. You get some breakdowns of sales and sales per unit. But the big one for me, or the big differentiator, if you will, if you look off sort of to the right side, you see where Chipotle has a 0. That is the number of franchise units. Domino's obviously opting for a different model, and they have 5,500 franchise units with 400 corporate stores, and Chipotle has kept everything in-house here to date. You look off to the far right, the total change in units from 2017. This is the 2019 QSR report. The 2020 hasn't been released yet, but you get a little bit of a feel for the growth in units. Domino's at that time rose 258 units, while Chipotle rose 83. I think I have some updated numbers on unit growth when we dig into these stocks. All right, first up on the board, let's take a look at Domino's stock and get a feel for which way they're trending as a business. Stock price today for DPZ at $391.46. You have a P/E ratio today of 34.91. 52-week range goes up as high as $422. So a little bit off of where they stand today. And the one bonus there highlighted in yellow is that Domino's does offer a dividend, currently at 0.82% of the share price. And at the top of the board, I have some other metrics that I filled in. Forward PE of 34, so really close on the PE ratio. Sometimes you like to see that go down a little bit, but for the immediate future, things are about flat on the PE side. Trailing 12 months revenue, $3.76 billion, cash on hand of $250 million, and a debt load of $4.4 billion. A lot of restaurants hold a decent amount of debt. And Domino's, I think, is in a pretty good position considering their sales, their 12 months of sales, and I think that they did take out a couple extra credit lines just to manage through the pandemic in case anything bad happened. Okay, so here's a glimpse at the second quarter results from the Domino's corporate website, and I highlighted a couple of things to call out. Global retail sales growth was 8.1%, U.S. same-store sales growth of 16%, international 1.3%, global net store growth, the number of stores, was plus 84. So these are all compared to last year. And obviously, the pandemic has changed the world significantly, and in Domino's land, it has been a benefit. That makes sense to me anyway, because Domino's offers delivery, but it's still impressive when you think about probably all the stores that had to close for a time being when everything was on pure lockdown. Couple extra notes here. The second quarter marked the 106th consecutive quarter of international same-stores growth and the 37th consecutive quarter of U.S. same-store sales growth. So phenomenal streak there for Domino's. The company had second quarter net store growth of 84 stores, comprised of 39 new in the U.S. and 45 new international. And the final note there is just the declaration of a 0.78 per share quarterly dividend. All right, so that's kind of the past in Domino's, and as investors, we're always looking ahead to the future. So I dug through some of their investor reports and presentations and trying to find out, what is the big theme for Domino's? And you can see that I grabbed this from one of the slides. Their goal through the year 2025 is to get 25,000 stores, $25 billion in global retail sales, all by the year 2025. So that's what they're driving towards. They've got the franchise model. They're well known for their app technology that customers use. But if you really get into the heart of the corporate atmosphere for Domino's, you really see that they're all working together. So they're big on their franchisees. They're big on implementing technology and helping the ship run smoother and growing sales. And the biggest thing that I do like about Domino's too is they're really focused on new order creation, right? So as opposed to trying to eke up prices a little bit to make more money, they're really pushing to drive new customers and perhaps more importantly, repeat customers to drive the bottom line. All right, so let's take a look on the flip side with Chipotle. Stock price today of $1,148. You got a P ratio of 127, so pretty high P ratio there if you compare to Domino's that was in the mid-30s. 52-week range of 415 to 1187, so similar to Domino's, you're just a little bit off of that 52-week high right now. No dividend for this stock as they are still in growth mode. Forward PE sinks a little bit to 105. Trailing 12 months revenue, $5.62 billion. Cash on hand of $900 million. And the debt load, Yahoo was showing $3 billion, and I need to scratch that out because what I read further in their corporate reports is they actually have no long-term debt right now. So they did take out some credit facilities during the pandemic, but right now they have no long-term debt. So that's a different position on the positive side for Chipotle versus Domino's. All right, now taking a look at Chipotle's second quarter results. They had a decent number of highlights when you consider all the stuff that's going on in the world. The revenue did decrease 4.8% year over year. Comparable restaurant sales declined about 10%, but digital sales grew 200% and accounted for 60% of the sales for the quarter. So again, similar to Domino's, here's a company that has invested in digital sales, easy, quick ordering, pickup, all that stuff. And it really paid off for them during this time. Down at the bottom, the last point there, they did manage to open up 37 new restaurants, including 3 relocations. They also closed 3, and about 30 restaurants remain temporarily closed because of COVID, mainly inside malls and shopping centers. So out of all the swirl in the second quarter, which everybody went through, it's good to see Chipotle continue to push the envelope. They obviously suffered through some store closings, probably more than Domino's, or at least longer than Domino's, is my guess. But they continue to push the envelope, which is huge. All right, so we talked a little bit about Domino's and what was their sort of calling card for the future and the $25 billion. I think with Chipotle, what we're seeing, which makes a lot of sense, is doubling down on digital, doubling down on the quick part of quick service. So the going into the store, which has obviously been the root of their success, is now being transformed much faster because of the pandemic. And what you see here in this article, just the headline alone, hiring 10,000 new workers due to digital growth. There's also some points in here where some of the latest Chipotle restaurants have what they call a Chipotle lane, which is basically a drive-through lane. I'm not sure if you're allowed to order in the drive-through or if you have to use the app and then drive through and pick it up. We don't have those in Cincinnati yet. But the bottom line is Chipotle sees the writing on the wall. They know what's going on, and that is fast, convenient, mobile ordering, offerings. These are the things I think everybody has realized can really push sales for your restaurant. Domino's was in a position where they had already been working on it. Chipotle recognized what was working in Q1 and Q2, and they're doubling down. So both of these companies are in great position to take this kind of change of behavior and focus on what's working and what customers expect. All right, taking a look at the TipRanks dashboard to get a feel for what the best performing analysts think of both of these stocks. Shout out as always to TipRanks. I am a paid subscriber. My affiliate link is in the description if you're interested in checking out the service and potentially supporting the channel. From a Domino's side, we have 12 buys and 6 holds. Median price target $426.18. That's about 10% up from where we are today. You got a high analyst of $450 and a low of $330. So Domino's right now, massive company, billions of dollars in sales. They just had a pretty nice run up after the Q2 earnings release. And yet some analysts here, or the median analysts, are saying you still got a 10% run up. And don't forget that dividend, which if you're going to be a long-term investor, it's probably honestly the only way to play a stock like this. If you're going to be a long-term investor, then there's a lot of benefit, I think, over the next 3 to 5 years. All right, now let's take a look at Chipotle. We have 14 buys, 9 holds, median price target of $12.0853. That's about 5% up from where Chipotle stands right now. You got an analyst high target of $14.50 and a bear in there at $7.51. And I think with Chipotle, the opportunity is going to be similar to Domino's. You're looking at 3 to 5 years if you're a big fan of the company. This isn't a rocket ship kind of stock through the end of the year. I think Domino's and Chipotle have both sort of celebrated wins already. However, there's nothing keeping you from participating on potential success of Chipotle over the next 3 to 5 years and making a strong, risk-averse investment that should gain significantly over time. All right, so bottom line for me, both of these companies, they're in different places, they deliver food differently, but they're so comparable, right? They're both doing great things. They've both invested in technology. They've both recognized change of consumer behavior and adapted quickly. I'm not sure you could go wrong with either. Domino's certainly has the larger footprint, and you could argue maybe a stronger foundation of success, not to mention a lot of international exposure, and the franchise model takes some of the risk out as well. Chipotle, on the other hand, has kind of that cool factor, if you will, if you want to attribute it to millennials or Robinhood investors. I'm not sure it matters, but Chipotle, I would say, is the trendier choice at this point, at least in the restaurant game. However, they're going to take on the risk of opening every store, right? They don't have that franchise model, but they also have a lot more untapped real estate compared to Domino's that is running about, twice as many stores as Chipotle has. So you could make the argument that Chipotle has twice as many opportunities as Domino's as they work to reach that same store count. The one ding in Domino's, in my opinion, is as strong as Q1 and Q2 have been. Now that the world is sort of coming back online, we'll see what happens in the long term. Does Domino's suffer a little bit as people go back out into restaurants or start driving around and picking up their own food? Or does delivery remain strong? These are the things that we won't know for sure, but obviously any more restrictions you see on dining in restaurants is going to be a boon for Domino's, assuming that they're still allowed to offer carry out and delivery. So at the end of the day, both of these stocks are winners, absolutely for sure. They're both long-term plays, in my opinion. There's no sense getting in here if you can only hold a stock for a year. You've got to commit to 3 to 5 years on this one. And again, the upside is less risk than you would find with a penny stock or an up-and-coming stock that may not work out. But even with that less risk, you got two companies here that are pushing the needle, right? They're striving for results. They're not going to sit on their hands and just watch money trickle in. They're driving for success. I personally would choose Domino's between the two, just because I like what they're doing on international. I personally like the franchise model, simply because it gives you a little bit of risk aversion as a large company. And I think that they're doing things right with mobile and with their sort of value proposition. Chipotle's doing great too, but if you sat me in front of the two stocks and you made me pick one, I'd lean towards Domino's. All right, guys, hope you enjoyed this Domino's versus Chipotle stock analysis. Please give me a like and subscribe if you can, and I'll see you on the next video.